Right, good afternoon. I'm Matt Toll, one of the board members of Commerce Ballarat, and I'm here with
Brent Irvin, Director M&B Accountants and also current Treasurer of Commerce Ballarat.
All right, now with the recent federal budget that came down the other week, we thought it would be appropriate to have a discussion on the budget proposals as they've been put forward by the government with regard to the treatment of family trusts and or discretionary trusts. We'll just call them, I think, for the purpose of this, family trusts today, Brent. So family trusts have been around for a long time, and Brent, you could explain to us what the major benefits and utility of a family trust is.
Yeah, thanks, Matthew. So the family trusts are quite a common structure. We see, according to the ATO stats, about 400,000 trusts used in business, and about 240 of those are for small and micro businesses. Trusts, they serve the purpose of several purposes. One of those is asset protection. Quite a lot of people use those to help protect their assets, and also for succession planning as well. Should protect their assets and to pass them on to the next generation. One of the other main benefits is also income splitting, which is what the government are targeting in these latest announcements.
So with a trust, what can happen at the end of the year is the trustee of the trust can determine where the income and or capital, but primarily what we're talking about here is the income of a trust can be distributed to person A, person B, company A, company B, charity A, whoever, anyone captured within what's called a beneficiary or potential beneficiary of the trust. So that gives that flexibility.
Yes, and one of the benefits of that, which small business people see, is that some of those beneficiaries might be on a lower tax bracket and therefore paying overall a lower rate of tax. Previously, there's been some provisions that help to stop that being manipulated, and the government have now gone in a bit further with these latest changes.
So some of you may recall the issue with regard to personal services income, and there's some other things in there, Brent, as well.
Making sure that the beneficiaries are actually receiving the benefit of that distribution rather than on paper distributions. And also the general anti-avoidance provisions of Part 4A, which aim to stop tax avoidance.
Yeah, exactly right. And there's also a thing called Division 7A where you're distributing to companies and not paying benefits out, and it can be a bit. That's why you pay your accountant very reasonable price that you pay your accountant every year when you're using a trust. So the proposed changes that have been put forward in the budget for this year, Brent, if we can just quickly run through those.
Yeah. So from 1st of July 2028, the government are proposing that there'll be a minimum 30% tax paid by trusts, and a change in the way that beneficiaries are actually taxed. At the moment, the beneficiaries of the trust are the ones who pay the tax, and that will be changing from 1st of July 2028. Tax will be paid by the trustee at 30% on the income, and then a credit will be then distributed to the beneficiary for their use in their tax return. So effectively, the minimum tax rate is going to be 30% for trust income.
Yes.
So subject to a few exclusions.
Yes, so the beneficiary will get the credit for the tax that the trustee has paid, but it won't be refundable. So if the trustee's paid 30% tax and the beneficiary is only paying 20% tax, they won't get that extra 10% tax back, like a franking credit, for instance, on a dividend.
So that's the mechanism that the government are proposing to ensure that the 30% is the minimum rate of tax. And obviously that will impact particularly small business. Sometimes the income the profit is quite small for smaller businesses. So, mum and dad business potentially splitting the income 50% each may or may not be above 30%
Yes, that's
tax,
right.
and so there'll be an impact on them.
Yeah, and they, as we said, and we do need to highlight here that these are proposals as put forward in the budget at the moment. It's not legislation. So, like all proposed legislation, it will be subject to potentially change, and you will have seen quite a number of articles and discussion in the press about various groups having issues with the proposals as they have been put forward in the budget.
Yeah, and it's, a positive is that it's not coming in until 1st of July 2028, so there is a lead time that we've got to be able to perhaps put our ducks in a row and be able to alleviate some of the changes.
Once we know what
some
they actually are.
Yes, that's right.
Yeah. So, you mentioned there a minute ago about the cash position of a trust, family trust, or as we're describing them at the moment, Brent. Can we talk a bit further about that? Because the cash flow impacts, particularly for this style of change, is going to be significant for a number of entities.
Yes. So the way that the trust is taxed will certainly change. The tax will be payable by the trustee rather than the beneficiaries of that trust. We anticipate there'll also be sort of prepayments of tax required once they're in that system. So rather than the ATO waiting until year end and 10 or 11 months after the year end, there'll be sort of like the pay-as-you-go instalment system that's currently in place, meaning that the tax will be paid, a prepayment of tax early. Potentially there's 2 years worth of tax being paid in one year in that instance.
One of the things the government has put out their paper, which was released. It talks about the taxation of discretionary trusts, and we'll put a link to that as part of the video here. They do mention in here about rollover relief. Brent, would you like to just touch on that briefly?
Yes. So the government will be looking, or quite a lot of taxpayers may look to change their structure, move away from trusts, and perhaps move into a company structure. Small companies are taxed at 25% rate, and money can be retained in that company. So potentially, if someone was to transfer to a company, there would be capital gains tax payable. The government have announced that there's going to be a 3-year period where you can move from a trust to a company without that capital gains tax cost. So that will be from 1st of July 27 to 30th of June 2030, which sounds like a long way away, but it isn't. Which will be fine for small business. With business assets, those rollover will be fine, but potentially there's other issues such as stamp duty if there's property involved. So that'll be one where we need to speak to the lawyers and the accountants to
and the stamp duty too is a state-based impost. So depending on the jurisdiction you're in, like in Victoria, it's roughly 5% of the value of real property at the moment. So it might be that the federal government will have to negotiate with the state governments to get an exemption from state stamp duties with any restructure that does occur with trust properties.
Yes. Yeah. So again, as we keep saying, it's one of those we need to wait for the detail, which will come out in the coming months.
Exactly right. One of the things the discussion has been that I've seen is the government's very keen to say, well, one way you can get around this is rather than having your beneficiaries receive a distribution at the end of each year, you can pay them wages. Now, when we start paying wages, that brings with it a whole raft of other challenges. Yeah,
it does. Obviously, with wages, there's that extra compliance that the small business owner will need to undertake, including single-touch payroll, superannuation, which is now going to payday super, so paying the super at each pay run.
Date of pay, yep.
Yep, work cover as well, and just the added time that's involved in in making those pay runs in your accounting software.
And it can also, depending on the value of your payroll, the size of your workforce, it may also trigger payroll tax for certain entities that are running through trust as well. So there's lots of issues around how you see these the changes that have been proposed applying to your particular family trust. Now, with the rollover relief we've touched on, one of the interesting things, and we had a discussion yesterday about this, which was brought up in an article in the Australian this morning, is with regard to charities.
Yes.
So a lot of trusts make distributions to charities each year. So
potentially one of the beneficiaries of a trust can be a charity, and the way that some business people can then donate be a good corporate citizen and donate to a charity, and how that will operate in the future is a bit unknown at the moment, and certainly there could be an impact on charities because
instead of being 100%.
The benefits are going to be a lot less because of those franking credits that don't come through.
Yeah, so they'll effectively, if you distribute $100 to the charity at the end of the year, under these proposed provisions as they are, you would pay tax 30%, which would get it sent off to the government, and the charity would only receive $70 rather than $100, and the government would take the $30, and the charity, because it's non-taxable, would not be able to claim the $30 back. So there's been some discussion this morning with regard to that. So I think in summary, Brent, it's about the rollover, and once we finally get clarity on the actual legislation.
Yes. Yep.
Yeah.
And obviously, it's a watch this space. We need to keep an eye out for the detail that comes out as when the legislation's tabled and when there's more detail from the government. We're sort of dealing on an announcement only at the moment, but it's certainly something that all small business owners operating through trusts need to be aware of and talking to their advisors about.
Yeah, very much so. So don't necessarily do anything because we don't know the final look of the animal that we're dealing with at the moment, but just be aware of it, and if you've got any concerns, please use your professional advisors. Please don't use ChatGPT or anything like that, because that can send you down a rabbit hole, but use your professional advisors. You're getting deluged with information from all corners at the moment.
Yeah, certainly we are, and obviously the team at Commerce Ballarat as well are here to assist and provide some advice and advocacy in that area as well.
But as with any change, if it does impact you, just please hasten slowly.